Bloomberg Quint.
Good morning. You're watching Daybreak on Bloomberg Quint Live, and I'm Alex Matthew. First, the headlines this morning. US President Donald Trump and Chinese President Xi Jinping have agreed to a truce in the ongoing trade war. Both parties will not impose new tariffs for 90 days while negotiating a lasting agreement. The truce has already had a positive effect on Asian equity markets and emerging market currencies. India's economy moderated in the July-September period. Gross domestic product grew 7.1% due to weaker consumption demand and also a slowdown in the services sector. GST collections for the month of November fell below the 1 lakh crore mark, also below the government's expectations. And November was a mixed bag for auto companies. While Mahindra & Mahindra, along with Escorts, reported robust sales, the figures of Maruti and Tata Motors saw a decline. Now, US equity markets ended higher on Friday, with all three averages gaining about 0.8%, but that was in anticipation of what took place over the weekend. I'm talking about the G20 summit in Argentina and the much-awaited dinner meeting between US President Donald Trump and Chinese Premier Xi Jinping. There was also the meeting between Russia's Vladimir Putin and Saudi Prince Mohammed bin Salman, but we'll get to that later. First, let's talk about the trade war. Now, Chinese President Xi Jinping and his US counterpart Donald Trump's decision to suspend the imposition of new tariffs for 90 days, essentially a truce, has put the brakes on an escalating trade war between the world's two largest economies. Now, the countries will use this time to negotiate, hopefully, a lasting agreement. This was the first face-to-face meeting between the two leaders since Trump's China visit in November last year, and since both countries started imposing tit-for-tat tariffs on each other's exports. Bloomberg's Eric Schatzker has all the details of that agreement, or temporary agreement, in this report.
President Trump and President Xi found common ground at that dinner on Saturday night here in Buenos Aires. We can talk about a couple of the details. They are very important. The ceasefire, as it were, lasts for 90 days, so that takes us more or less until the end of February. The United States has agreed not to raise tariffs on some $200 billion of Chinese goods. They were set to go up to 25% on January the 1st. Instead, they're going to remain at 10%. And in exchange, and this is the big deal, the Chinese have agreed to do a number of things. First of all, they have agreed to start buying more American agricultural and industrial goods. They have agreed to take action on fentanyl. This is that high-powered opiate which has been the source of so many crises and heartbreaking situations in the United States and, of course, elsewhere. But most importantly, China has now has 90 days to demonstrate that it's willing to how would I put it, to show some progress on the Trump administration's biggest beefs. What are those? It's not just the trade imbalance. It's the systematic theft of intellectual property. It's the coerced transfer of industrial technology. It's subsidies on state-owned enterprises, and it's cyber espionage. 90 days. It sounds like a long time, but it's a lot for the Chinese to demonstrate in short order.
Now, the truce may give emerging market traders a reason to cheer, according to Chetan Iyer of Morgan Stanley. Speaking to Bloomberg's Sophie Kamruddin, he said that it has not dispelled the uncertainty that the dispute has inflicted on markets through much of the year. Listen in.
The actions over the weekend is definitely a positive outcome and brings modest upside risk to our global growth outlook. So essentially, the way we operated in our analysis in building in growth sentiment because of the trade tariff is that we always tend to say that, okay, whatever is announced, we will build into our numbers. So since this tariff was already announced that from Jan 1, it will go from 10 to 25, we had built a 10 bips downside to our growth on account of that. But if that doesn't happen, then it brings that 10 bips upside to our global growth outlook.
So modest upside risk, that's what you're anticipating here. What do you make of China's response thus far? Do you see their stimulus continuing? That seems to be the case.
in the sense that what do you think China will do going forward on the promises that they have to fulfill. So I think there's a lot to be done as yet. So we would say that the road ahead is still quite bumpy. We think China will try to come up with a whole lot of adjustments that they would have to make, particularly promise on protection of intellectual property issues, but more importantly also liberalize further its economy, so to ensure that the agreement moves forward.
All right, so 90 days, that's the key, or that's a key phrase going into trade today, but at least it's a limited positive to take into trade today, and in fact that's visible from most of the Asian markets that have opened up, also the emerging market currencies, and the effect is also being seen on safe havens. For a check on all of that, what's happening in Asia, let's go across live to Bloomberg's Rosalind Chin, who's joining us live from Hong Kong. Good morning, Rosalind. A lot to look forward to today. What are you picking up?
Certainly, the Asian markets are jumping at the beginning of this month of December in reaction, of course, to that trade war truce between the US and China, as you have been discussing. So let's take a look at how the markets are reacting this morning. The MSCI Asia Pacific Index up by 1.6%, Nikkei up by 1.25%, Topix up by 1.4%. Hang Seng, of course, just opened a few moments ago, up by more than 2%, and Shanghai Composite up by 1.9% at this hour. Of course, there had been already glimmers of hope at the end of last week as some traders had been discussing the possibility of this truce coming about, and of course that is helping to drive markets forward. And of course we'll have to see though whether this positive sentiment can last, and possibly it can, all the way up until Christmas, giving a Santa Claus rally until into the new year at least. But what we're also seeing is of course movement on commodities such as soy, because agriculture of course was a huge part of the discussion that was had between US and China over the weekend. We're seeing that soy futures jumping in Chicago up by more than 2% at this point, leading gains, in fact, in the agriculture markets. China's agreed to start buying certain commodities straight away, like, for example, soybeans, as part of this truce. But, of course, sustained gains will actually somewhat depend on how fast farmers can deliver. But we have seen that farmers in the US haven't just been not planting or getting rid of their stock. A lot of them have been hoarding their stock in the hopes that something like this would happen and they would be able to gain entry into Chinese markets. So we'll see whether those commodity prices there will be able to sustain their price increases. On a wider picture, though, we can see that some damage has been done already to certain Asian economies. We saw PMI numbers coming out last week, notably weaker in many economies. We had South Korea, Malaysia, Chinese PMIs as well, Taiwan coming in noticeably weaker. That damage has already been done. We're also seeing, this softening trend in exports as well. So yes, this truce is helping markets, is boosting the markets. Of course, US Treasuries also jumping, the yield back above 3%. But in the long term, there may have to be firm action before we see some of these Asian economies here begin to repair anything back to where they were before. Back to you.
Thanks so much for that, Rosalind. Now, let's talk about trade in India here. Agam Vakil is joining me to tell you all about the trade setup for the day in India, and also to tell you what's happening in the futures and options space. I suspect, Agam, that this is going to be a relatively easy trade setup for you to give, based on everything that we've seen over the weekend. What are you picking up?
You bet, Alex. It certainly is going to turn out to be a good day of trade. I think the key element here is, Alex, that we see the Nifty move above the mark of 11,000. Okay. Because that's a crucial level here, and that's indicative of, from what we've seen on the SGX Nifty. It's currently at around 10,986, so about 14 odd points away from the 11,000 mark. But that said, when it comes to trade, our last week, and that is last Friday, it was a very quiet day of trade. We did see some of your mid-cap and small-cap indices and companies catch up with the benchmarks. And it was the same for the Nifty Banking Index too. It wasn't, because we did see weakness there. And this weakness was largely on account of the fact that we saw weakness in the Nifty PSU banking space. Now, among other sectors which did well was Nifty Pharma and Nifty IT. Of course, IT to a certain extent after the kind of volatility that we've seen in the Indian rupee against the US dollar. But Areas for now are indicating A+. So Wipro, Infosys, and Dr. Reddy's are trending higher. Tata Motors, of course, is likely to see pressure because of the weak domestic sales that they've reported for the month gone by. Vedanta, ICICI Bank, and HDFC Bank, among some others, which are also showing weakness today. But foreign institutional flows, well, 333 odd crores going out after a really long time, and after the month of November recording the highest that we've seen in 10 months. DIs, of course, did buy into the markets with stock worth 1,500 on a net basis. Well, again, it was very evenly poised between the gainers and the losers on Friday. HDFC, Kotak Mahindra Bank, Yes Bank, M&M advancing. On the other hand, financials like ICICI Bank and IndusInd Bank bearing down on the indices. But let's take a look at the futures and options space then. And this is where we're going to see very little cues coming in because the indices didn't move so much, but the Nifty Banking Index, however, did see weakness, and that's where we've seen unwinding. And do remember, this was the first day of the new series, and we still saw some amount of unwinding coming through. So that could be some concerns here. But when it comes to your open interest distribution, now when it comes to your range, we're starting to see that develop. 10,500 is the one with the maximum open interest in puts, and 11,000 in call. But the 11,000 put is not too far away from the 10,500 one. So, well, I reckon this is likely to do with some amount of consolidation around the 11,000 mark. Now let's wait and watch because we still have a long series to go. When it comes to changes in open interest, it was once again 10,700, which was the most active. And moving on, taking a look at your VIX, this is where things could get concerning because the VIX has risen to around 19.2. Should we see strength in the benchmark indices? Well, we likely see the VIX come off to a certain extent. But let's move on to take. Okay, so this is your Nifty put call ratio, which is currently at around 1.7 against 1.75. And the Nifty banking put call ratio also at around 1.17, considering it came off to a certain extent. And in terms of stocks, again, we're keeping an eye on Oil India because that declined by 8%. Moving on from Oil India, we also have Repco Home Finance, and Repco Home Finance also saw some longs building up with substantial increase in open interest. And finally, we also have Siemens, which actually saw short covering considering the tremendous unwinding that we saw in the stock. So, well, mixed cues coming in for some of these stocks, Alex. But once again, all eyes on the Nifty. Well, reclaiming 11,000.
Absolutely. A big talking point will also be in the currency markets and the bond markets based on what we've seen so far. Sure. I'll get to the bond markets in just a bit, but let's talk about currencies and what you should expect going into trade both today and also possibly the rest of the week. You've seen a recent trend of appreciation in the rupee, and that's on account of several factors, most importantly with regard to crude. We also have developments to talk about with regard to crude, but you've seen that safe haven assets are actually trading weaker. So you have the Japanese yen that is trading weaker based on the developments from the weekend. That's the truce between China and the US. And you also have the US dollar that's trading weaker against most major currencies. So you could see a further appreciation in the rupee. Of course, let's pull up what happened on Friday and just give you a snapshot of the currency movement if we can. Essentially, that'll set the context of where we are at. So you see the trend line moving upwards. That's the kind of appreciation that we've seen in terms of the recent past. But let's talk about one of the major developments that will have a bearing on the bond market today in all probability. After peaking in the first quarter of the current financial year, growth in the Indian economy moderated in the July-September period. A slowdown in consumption and the services sector can be attributed for the fall. Gross domestic product grew at 7.1% in the second quarter, as against 6.3% in the same quarter last year and 8.2% in the first quarter of the year. In gross value added terms, the economy grew at 6.9% in the July-September period. This too was slower than the 8% GVA growth reported in the first quarter. Now, Ira Dugal caught up with D.K. Joshi, who is chief economist at CRISIL, Soumyakanti Ghosh, who is chief economic advisor at SBI, and former chief statistician Pranab Sen. They all agree that the slowdown in demand is actually a cause for concern.
I think from the expenditure side, it is only private consumption slowdown, which is the bulk of GDP, that's responsible for the slowdown in the growth to 7.1%. The the government consumption expenditure, private overall investments, and exports, I think they've all accelerated. The growth rates are higher than they were in the first quarter. So that's the expenditure side of the story. I think from the supply side, if we see, the drag is coming from services. I think the non-service part of the economy is doing reasonably well. The services, which used to be the driver, they have slowed down, and I think this slowdown has been, this is the third quarter they're showing below trend and very weak growth rate. The finance, real estate, trade, I think these segments are not growing above, perceptibly above 6.5%. So they're all below 6.5%. I think this is what used to fire growth earlier, and some of the reasons are explainable. I think the financial sector, the slowdown, particularly the banking sector, is also getting reflected in GDP. Telecom sector gets into the other part, the communication part. So I think unless these start reviving, the decisive upward trend in GDP is some time away.
Mr. Ghosh, is that your broad analysis as well? And then I'll get into specifics.
See, I have broadly 3 points to make. The first is that the private final consumption expenditure had indeed slowed down significantly in second quarter. The constant prices, the year-on-year growth rate is around 7%, which is down from 8.6% in the last quarter. So that's point number one. The point number two is that if you actually look into core GVA, basically which excludes the agricultural sector and the public sector, the public administration, that has significantly slowed down to 6.6% from 8.6% last quarter. So that means there has been an overall demand slowdown. And the third thing is that the apparent distinction, the apparent contradictory growth rate of the agricultural sector and the non-agricultural sector now looks clearly visible. If I break down the GVA into non-agri GVA and agri GVA, the non-agri GVA has expanded at 13.4%, nominal non-agri GVA, and the agri GVA has actually now collapsed to 2.8%. And in fact, the agricultural GDP deflator, if I calculate it, that is now at negative. September is actually at -1%, which is for the first time till June 2017, the agricultural sector, the price deflator has turned negative. So this indicates that there is a significant element of rural distress which is happening, which is perhaps adding on to the overall sentiments. And apart from the factors which Joshi mentioned in terms of the service sector, I think this is also one of the factors which is dragging down the overall growth rate.
All right, those are great insights, Mr. Ghosh. Dr. Sen, I'm coming to you last so that we can get a slightly broader picture from you as always. What are you seeing in the growth rates that you've seen in the past few quarters and in this quarter? 8.2, while not an outlier, but clearly seemed like it was boosted at least by a base, etc. Wasn't reflective of any dramatic strength in the economy which was lasting.
Well, there are a couple of things. The first is the base effect, of course, does certainly play a role. The base effect in the first quarter was strong, and it's starting to wane, and it will continue to wane as we go forward. But that apart, I think there's a more fundamental economic story that needs to be told, which is that consumption behavior is usually fairly predictable, in the sense that even if there is a downward pressure on the growth in incomes of people, they do try and maintain the consumption behavior over time. But after a while, the pressure becomes too much and consumption tends to go down. If we are seeing the beginning of this downturn, then it can in fact be persistent. So that's something we're going to have to watch out. At the moment, it's only 1 quarter of data, but that's a very real danger.
Now, the other big talking point in the recent past has been the movement of crude, and from the start of October, it's moved significantly, over 30% or thereabouts, the change in the oil prices. That's probably reflecting when you go to fill fuel at the petrol pumps. But over the weekend, there was another big development. Russia and Saudi Arabia have agreed to extend OPEC's efforts to stabilize oil markets. That's according to Russian President Vladimir Putin. He said this over the weekend as the broader coalition of producers inch closer to a deal this week. Bloomberg's Rami Inocencio has more in this report.
The term rebalancing is floating in between Russian President Vladimir Putin as well as MBS, Mohammed bin Salman of Saudi Arabia. And they did make that memorable handshake over at G20, talking about possibly doing something here. But in terms of OPEC delegates, they already gave their blessing. Now it just has to be seen what is actually really going to happen. But Russian President Vladimir Putin came out with a statement saying, listen, we are going to do this, but there have to be some details that we have to figure out. For example, he said there's no final decision on volumes there, but together with Saudi Arabia, hand in hand, we will do it. And from whatever number, there's going to be it's going to be based on a joint decision. We agreed we will monitor the market situation and react to it quickly. So, like how we've said that the Fed is data dependent, Russia as well as Saudi Arabia are going to be data dependent as well. Hopping into the Bloomberg terminal, though, there is a lot at stake in terms of the oil price. They don't want this to go much further lower. But take a look in the GTV library, because in November, it had the worst monthly fall ever since 2008. Of course, we know what happened back then, the great financial crisis, when oil fell even worse. So they're going to try to be pushing this higher. Ever since September, it fell by about 30%. That's from a 4-year high. Let me go ahead and flip up the chart here just once into the GTV terminal library again. And we can see that Saudi Arabia, Russia, as well as the United States, they are the biggest oil producers in the world right now. We can see that U.S. and Russia here in the yellow and the blue are having the biggest monthly outputs. The next question, though, is how much will be cut, starting when, and of course, for how long?
And those questions will likely be answered at the end of the week when the OPEC meets in Vienna. We'll bring you all the live updates from that meeting. But as of now, let's talk about the stocks that you have to watch out for in trade today. Yash Upadhyay is joining me with the stocks and news. Good morning, Yash. What is the stocks on your list today?
Morning, Alex. I'll start with the auto sales numbers, so watch out for the auto names. We'll start with Maruti Suzuki, India's largest car maker. That reported a third consecutive month of declining sales. Sales fell by as much as 0.7% to 153,500 units for the month of November, led by a 19% drop in its exports. Mahindra & Mahindra came out with a good set of numbers, with their automotive sales increasing by 17% on a year-on-year basis, driven by strong growth in the commercial vehicle segments. Escorts reported a good set of numbers as well. On November, auto sales rose by 56% on a year-on-year basis, coming in at about 8,005 units. However, Tata Motors disappointed for the month, with sales falling by about 4% to 50,470 units versus the Bloomberg Quint poll of 56,000 units, which the company attributes to lower consumer sentiment as a result of tightening liquidity as well as higher interest rates and rising fuel costs. Next apart is Hero MotoCorp, which reported a 0.8% increase in sales, coming in at about 610,000 units, again lower than the Bloomberg Quint poll of 626,000 units. So all in all, it was a mixed number as far as the auto sales are concerned. But that apart, we'll be watching out for the aviation names, as ATF prices for the month of December have been cut by 11% pan-India due to lower crude prices and a stronger rupee. Sandhar Technologies will also be in focus after the company has signed a joint venture with South Korea-based Kwangsung Corporation to make plastic molds and accessories for passenger vehicles as well as commercial vehicles in India. And that apart, we'll be watching out for Monte Carlo Fashion as well, wherein the company has approved a buyback of close to 4.6% at a price of about 550 rupees per share, which is, by the way, at a premium of 42% to its current market price.
All right, thanks so much for that, Yash. Well, Somit Sarkar is joining me with the big brokerage calls of the day now. Somit, what do you have for us this morning? Good morning.
Good morning, Alex. On the big brokerage calls for the day, first we have is Nomura on Indian tire industry. Now, according to the brokerage, the industry fundamentals are in better shape now with healthy demand and high utilization levels. Now, the brokerage believes that the Indian tire industry is a play on healthy growth outlook, pricing discipline, benign commodity prices, which will go and support the margins going forward. Now, most companies have already taken a price hike by around 6%, according to the brokerage, thereby passing on most of the commodity cost pressure, which is a key positive for the sector. But despite a strong capacity expansion that is planned by these tire companies, given a strong demand scenario, the brokerage is still expecting the utilization levels for all the tire companies to remain high. Now, the brokerage has initiated coverage on 3 tire companies. Now, for Apollo Tyres, it's a buy rating with a target price of 288. For Seat, it's a neutral rating with a target price of 1346, and for Balkrishna Industries, it's a neutral rating with a target price of 1008. Now, the second brokerage that we have is IDFC Securities on Shankara Building. Now, the brokerage has downgraded the rating on Shankara Building to underperform from neutral and has cut the target price to 525 from 1065. Now, there's big cut in target price, and the rating is for Shankara Building has come post the conference call that the company had held on Friday, where it said that its margin would further slip due to competition and because of its aim to create a healthy balance sheet. Now, according to the brokerage, the competitive intensity is very high for the company, and the company also needs to improve its value proposition further. Now, for Shankara, the revenue growth benefit is expected to be lower compared to the cost involved in terms of margin trade-off, which is a negative for the stock. Now, for the brokerage has cut the target price and downgraded the rating given the weak potential benefit of this change in strategy and because of lower visibility in terms of execution.
All right, thanks so much for that, Somit. Now, water pollution is one of the biggest concerns facing our planet today. With rivers drying up and seas filling with plastic, we are faced with the added reality of a diminishing marine life. But all may not be lost yet. Have a look at what these young innovators have been developing that might just save our way of life.
My name is Hazik Kazi. I'm 12 years old and I'm from Pune.
Hi, my name is Gitanjali Rao. I'm 13 years old and I'm from Denver, Colorado.
The ocean pollution is a huge problem. It's a really huge problem. If no one does anything about it, my generation and the coming generations are going to suffer. Around 2-3 years ago, I had watched some documentaries about the ocean waste problem. This really broke my heart to see so many animals dying.
So water contamination is a huge problem all over the world, especially in a country like India. There's different types of contamination that could happen, but what I've been focusing on for the past year is lead contamination in water. And lead can get through water through many different sources, some of which you can see at your own home, like brass faucets is one that can really introduce lead into water.
So Eris is basically a large ship. It has various compartments in it and saucers surrounding it. So the saucers use centripetal force to suck in the waste, and the waste is stored into different chambers, according to large, medium, small and micro waste. There's also a compartment for oil. So the challenges I had in the beginning was first, making a ship was not child's play, right? I also think I had a lack of data because like this last week I found out that 80% of fishes in the Amazon had some sort of plastic in them.
It's like a box with the cartridge, and you dip the cartridge into the water you want to test. And then you open up your phone, you open the app that I created and connect to the device through Bluetooth, and then it gives you the results of what your lead status is.
One of the main challenges I faced when I was originally creating the devices, I finished research. At the end point when I finished research, I was so excited. I was like, let's get done with this. And I got everything ready. I had everything I needed. And then I asked my mom if I could do all the tests in her backyard with like carbon and chloride and lead. And she's like, no, you can't do any of these tests in her backyard. Eventually, the place that I didn't look at all, my school, was ready to give me a lab to do my tests in. So that was super, super kind and generous of them.
So right now, I've been working on improving the accuracy of my device in a lab space in Denver, Colorado. I'm actually working now more on the commercial feasibility of this product and if it can actually be out in the market. When if our kids put our heads together, we don't limit ourselves to ideas. We have the ability to expand our ideas and grow our ideas, and we have all these far-fetched ideas which can actually become a reality. When some adults limit themselves to ideas which can only be done, which at a younger age I thought anything was possible.
Well, we're completely out of time on this edition of Daybreak, but all stock-specific questions you can keep to us on askbq@bloombergquint.com. Also, Venkata, I'm not a bot. Thanks so much for watching. This is Bloomberg Quint.